It's Tuesday the 10th, I'm FX Blue and this is CurrencyTransfer.com's market update. So the headlines today are that house price growth helps support sterling, Chinese president's speech cools the trade war fears, and Draghi is calm over equity volatility and cool on inflation. So in the UK, since Brexit, one of the major drivers for the UK economy and associated concerns has and continues to be the reaction of the consumer. So far, low interest rates has offset increases in price, and consumer spending has held up well, helping economic growth. Another area of continued consumer support is shown in the house price data. Yesterday saw Halifax house price data increase by 2.7% for Q1. This was way better than expected, and naturally gave a boost to the pound because it adds to the prospects of a rate hike next month. However, the decision for that really does still hinge around inflation data and employment data, both out next week. However, the short-term reaction was that it helped sterling, boosted cable, and the exchange rate touched a high of 141.65 yesterday before a little bit of profit taking pulled things back to 141.30, where it remained overnight. Meanwhile, Charlie on the charts, he's warning that the pound may be a little overstretched. Now, what does this mean? In the dark art of the charts, the explanation is that we may see a little bit more retracement. So sterling may have to pull back a little bit further before any new challenge towards the 142.40 resistance level. So watch this space. It's all dark arts to me, but he's been right before. Over in the US, the dollar remains under pressure, despite the speech from Chinese president where he helped pour a little cold water on the trade war. He outlined the need for China to reduce tariffs and open their borders to overseas imports. However, the market isn't convinced just yet, and maybe this is because of the flop-haired donut on the other side of the trade spat. Donald Trump, other donuts are available, is no doubt praising himself for a job well done with respect to being strong in the eyes of the tariffs and moving China into the position that they've taken. However, to be fair, the president spoke of the Cold War sentiment in his country that needs to be swept away, and this is largely all part of the process ongoing in China. However, look, if I'm doing Donald a massive disservice and it was all down to his tariffs, the dollar still remains weak because of wider concerns. Most recently, this is down to the US-Russian relationship and the threat thereof after the alleged chemical weapons attack in Syria. It's going to be a challenge. It's going to continue, no doubt, as the story unfolds there. Meanwhile, the dollar index broke down below the 90 figure, touched a low of 89.80 yesterday before recovering just a little overnight. Over in Euroland, euro-dollar remained towards the lower end of its recent range, between 122.60 and 123.30. It's just moving along without any real direction at the moment. President Draghi was out with 3 of his colleagues from the ECB, all making speeches, largely from the same hymn sheet, saying they're not really concerned about the soft spot in the economy. The road to recovery was never going to be linear. Inflation remains under target and is too low currently. Spoiler alert, that means no rate alerts in the short term. And the ECB will continue to do all it can to provide a level playing field to all Eurozone members. So well played, sticking to the script there. Fairly quiet on the calendar today, but we'll keep you posted if anything of note rears its head. Any questions at all, pop them in the comments below and we'll get back to you soon.